Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 10 stocks to buy right now in a bear market. These companies and stocks are going to be the best ones to buy during a recession, a stock market crash, or a bear market like we are experiencing right now. These stocks and companies could prevent you from losing money unnecessarily in your portfolio, and they're also going to help you gain money throughout time, so it's going to help you build wealth and get passive income. Lately, the S&P 500, which is a fantastic stock market benchmark, has literally achieved the worst half that it's ever had in the last 52 years, particularly in the first half of the year. However, history has shown over and over again that anytime we enter a bear market or the stock market corrects or we go into a recession, it's an ideal time for very patient investors to invest into fundamentally strong companies, and those investors end up building a load of wealth over the long term by capitalizing on today's opportunity of a cheap stock market. So with that being said, let's dive into the top 10 stocks to buy right now, along with other major indexes like VOO and VTI, among many others. So if you want more videos like this one, remember to go and smash that like button right now, comment your favorite stock to buy or your favorite ETF to buy during times of stock market uncertainty. Subscribe if you are new for more videos like this one, and without further ado, let's get right into it. So the number one pick is going to be Berkshire Hathaway. Also, even though I'm going over this article, I have a check mark next to the companies that I personally am buying, because I want to be transparent with you all about the companies I am buying and what companies I am not buying, depending on the risk to reward that they offer, considering the current negative stock market environment right now. But Berkshire Hathaway is definitely one that I have bought recently that I added to my IRA, and it's honestly one of the best stocks to buy right now in my personal opinion. Berkshire Hathaway has a ticker symbol of BRK.B and BRK.A, and I personally buy BRK.B shares. And this company is ran by the billionaire and arguably one of the most successful investors to ever live, who is Warren Buffett, where he's given his investors an annual return of 20.1% over the past 57 years. This is literally 2 times better than the overall stock market, so investing into Berkshire Hathaway is one of the best investments you could possibly make. Berkshire is a rock-solid investment to own and to have in your portfolio that adds both stability and stock price appreciation. The company is loaded with various cyclical stocks because Warren Buffett uses this company to invest into other high-functioning companies, so Berkshire Hathaway, again, is one of the best investments you can buy in general, but especially during times of stock market uncertainty. Currently, the stock price trades for $269 per share, but honestly, it's supposed to be worth around $340 according to professionals, so please keep that in mind, and there's clearly more upside potential in this particular company. Now let's move on to the number 2 spot, which is CrowdStrike Holdings, ticker symbol CRWD. This company is a cybersecurity solutions company, and they're mainly known for their Falcon security platform. Right now, the stock price trades at $168, but it's supposed to be worth around $240. The reason why all of the companies on this list are trading for so cheaply right now is because the current stock market is falling in their overall price. But let's talk about their Falcon security platform. So Falcon was built in the cloud, and it relies and uses artificial intelligence to grow and learn so it can recognize and respond to new and developing threats. CrowdStrike also has a fantastic customer retention rate of around 98%, so clearly their customers prefer the Falcon security platform to other cybersecurity platforms and technologies. Also, their subscriptions have risen from around 10% to more than 70% recently, so clearly their customers absolutely love them. Moving right along here, in the number 3 spot, we have Enterprise Products Partners, ticker symbol EPD. The current stock price is $26, $24. However, it's supposed to appreciate to a share price of around $32, which is the current stock price target. This company is a midstream oil and natural gas stock, which not only has great stock price appreciation and growth ahead of it, but it offers investors passive income in the form of an 8% dividend yield, which is going to help fight against inflation and give their investors passive income. Their payouts are rock solid, and this company has consecutively increased their dividend payout for the last 24 years in a row. So clearly, if you're a dividend investor, you probably already have this company, and I would encourage you to enable drip investing so you can take that dividend that the company gives you and reinvest it back into that company so they give you a stronger dividend next time. In our number 4 spot, we have Bank of America, and clearly it has a check mark next to it, which means I personally have bought this company as of late because I am a huge Bank of America fan, just like Warren Buffett is. The company currently trades at a share price of $30, but it's currently supposed to be worth somewhere around $42 over the next year, according to price targets. This is a banking stock, and normally investors decide to shy away from banking and financial institutions during bear markets, but this is a unique bear market. This is a very unique recession because as the Federal Reserve increases interest rates so they can get inflation under control, this is actually very beneficial for various financial institutions. So what do I mean by this? Well, it means that we can expect a huge increase in the overall net interest income that is given out by fintech companies and banks and financial institutions. So their net interest income, by increasing their own interest rates, are going to bring them in a substantial amount of revenue to offset any risk that the economy is going to have for them due to increasing interest rates. So overall, in this particular bear market, financial institutions are fantastic investments, and Bank of America is one of the cornerstone financial institutions in my personal opinion. Also, I want to say that this company is digitalizing their overall products and services, and they're very innovative in that regard. To the total number of digital users that they had jumped from around 6 million to 43 million over the past 3 years. Another company that I really like would be SoFi Technologies, but clearly they are not as safe as investing into Bank of America. There was a number 5 spot on this list named Green Thumb Industries, ticker symbol GTBIF, but I actually had a hard time locating this company in a plethora of various brokerage accounts, so you may not even have this, or your brokerage may not even offer this particular investment, which is why I decided to exit out. But if you do have access to it, it could be a good investment considering the current economy. Now, to take this company's place, I would probably lean toward another company, which is just going to be an extremely safe company, which would be Apple, ticker symbol AAPL, which is a giant technology company. Moving right along, in our number 6 spot, we have another check mark, so I personally have invested into this company as of late, and that is MasterCard, which currently trades at $286 per share, but professionals believe the company should be worth around $424, so clearly this has a huge stock price appreciation ahead of it. This is another top stock, and it's a payment processing behemoth of a company. They're absolutely gigantic. Other companies that would be competitive to this would be Visa and American Express. I also like Visa a lot. I think I like Visa more than MasterCard, but MasterCard is clearly a company that I have also bought because I own both Visa and MasterCard. Typically, when recessions end, or even during recessions, payment processing companies tend to bounce back first before other financial stocks. And like we said earlier, in this particular bear market, investing into financial stocks is actually going to be very smart and intelligent for investors that want to buy and hold for the long term. On top of that, MasterCard just has a fantastic growth runway, and it's an extremely strong company fundamentally. Next, we have Western Digital, which is a storage solution specialist company, ticker symbol WDC. If we look at the price right now, we have a stock price or share price of around $33 per share, but it's supposed to be worth somewhere around $54 over the next 12 months to the next year. And because Western Digital has a very proprietary technology, particularly their NAND or their NAND flash memory solutions, they're going to be a big winner as more and more companies decide to move more toward a digitalized business model, so to speak. In our number 8 spot, again, we have another check mark. We have one of my favorite stocks, which is Amazon, ticker symbol AMZN, who is most known for their e-commerce platform, but I actually actually invest into them due to their cloud infrastructure platform and their AWS, which is their Amazon Web Services cloud infrastructure platform and technology. Right now, the AMZ share price is trading at around $115 per share, but I think that their stock price should be hovering at around $171. So clearly it's undervalued right now due to the major sell-off we've seen in the overall market because investors are freaking out. But again, if we can identify fundamentally solid companies, this is a time where we actually should be buying stocks. Amazon is a huge company that has multiple subsidiaries, and they own a plethora of various businesses and brands, and they have solid growth prospects ahead of them, including, but it's not limited to, their various services, their e-commerce platform, their advertising services, and what I like the best, which is their cloud infrastructure segment, which is their Amazon Web Services, AWS, where they have amazing operating cash flow and a potential profitability for this particular segment, which is going to quote-unquote triple Amazon's cash flow by the mid-decade. So clearly Amazon is a cash cow. As we move toward another segment, we're going to focus on electric vehicles. Now, some people would say Tesla, but this particular author highlights NIO. Why? Well, it's because Tesla is trading at a huge premium right now, which means it has a lot to cool off. We could see the TSLA shares cool off, but NIO has already cooled off to where they're only trading at $15 per share, and this is an electric vehicle company that's based over in China. But the company should be worth anywhere between $30 to $35, so give or take around $32 over the next few months. So yes, Tesla is a great investment, but right now we want to identify undervalued companies that have been hit very hard lately, and right now Tesla is not undervalued, according to various accounting metrics. There is an unstoppable transition more toward electric vehicles, which a plethora of companies are taking advantage of, but literally NIO is based in China, which is the #1 automotive market in the entire world. So clearly NIO is going to benefit from this, and also I just like their innovative technology, because it gives their customers and consumers various options for charging and swapping out their various batteries and even upgrading the batteries in their vehicles, which is absolutely crazy. So clearly NIO is a big winner in terms of electric vehicle technology. And then last but not least, we have Microsoft, which trades at $235, but it should be worth $330. This is a technology giant, which is most notably known for their Windows operating system, also known as OS. But again, like Amazon, I am not honing in on this company for what they used to be known for. I'm honing in on this company for what they will be known for, which is their cloud infrastructure, which directly competes with Amazon Web Services, and it's called Microsoft Azure, which will give Microsoft fantastic growth prospects and profitability well into the future. Right now, Azure ranks as the world's #2 cloud infrastructure provider behind Amazon's AWS, and then I think in third place it would be Google Cloud by Alphabet. Alphabet is another fantastic company to buy considering the current stock market environment, but Microsoft should literally have no trouble sustaining double-digit earnings growth even during times of stock market uncertainty. So if you want more videos like this one, don't forget to smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.